Hello and welcome to another episode of the Crypto Expert Series. I'm your host, Jamie Nuttall, an award-winning crypto tax advisor within the UK. And today we have the amazing Robin Thatcher from By the Books Accountancy. He also leads the Bitcoin roundtable within the UK. Between us, we have over a decade's worth of experience working in the crypto taxation space. Robin, welcome to the channel and tell us a bit about yourself.
Thank you for having me. So, as Jamie said, my name is Robin Thatcher. I run By the Book Accountancy. As a side-on of that, I've got a sort of website. It's cryptotaxhelp.co.uk. I've been in accountancy for about close to 20 years, and I moved into having my own business about 6 years ago. Found a bit of a niche in crypto and have worked through on that, really. So, bit of a crypto expert, bit of a Bitcoiner in the background. So, just try and get the tax done where I can.
So Robin actually has had a few stints at speaking publicly recently as well. So you're definitely in good hands for our sort of listeners, if you like. Between me and Robin, we should be able to answer most questions and, of course, go through some detail. Today's topic will be Bitcoin and taxation. So we're actually going to nail down into Bitcoin specifically. And the first question we're going to kick off with is, what's the difference between Bitcoin and crypto in general, maybe from a tax angle, Robin, for you?
From a tax angle, none. It's treated the same. From a personal angle, and bear in mind everything I say is subjective to my own opinion, but I believe that Bitcoin is the only crypto that is guaranteed to succeed. Not financial advice, but I think we're moving into a new world. But Bitcoin was created to be this perfect money, and it is. When we move into this new world where we almost, I won't call it a Bitcoin world, but a crypto world, if you like. Bitcoin separates itself from other ones. One of the reasons being the other ones haven't really built their utility as yet. I don't really see the utility. Now, I know people will be out there going, what's Bitcoin's utility? Well, it has a utility in many forms. But in terms of, what's what, where and when, my opinion is in crypto, it's a bit of the Wild West at the moment. I could decide today that I'm going to create a coin. I can call it Robin Coin. And if I've got the right marketing behind it, people will buy it. Now, the purpose behind that coin is that I run it. I'll have a team of devs who probably work with me on it. We'll all have a token allocation and we profiteer from what happens and when people buy it. Potentially, we have first mover opportunity to sell it. And we're seeing a lot of this, there's thousands of coins being released every week. Bitcoin doesn't have that. Bitcoin's never been hacked. It's never been scammed. It's never scammed anyone. It doesn't have a CEO. People will say, Satoshi is its CEO. He's not. He doesn't have control of Bitcoin. It's one of those things that it's purely decentralized and it works for the purpose of what it's in. Can people copy it? No, it's too far gone. For me, that there is a massive gap between Bitcoin and the rest of crypto. I'm going to be careful here because I'm going to explain the word intrinsic value. A lot of people will say Bitcoin or no crypto has intrinsic value, but I'm going to quote a friend of mine, Joe Bryan, and he said at an event I was at, he said, if intrinsic value is exactly that, it's what you value it at. So if I'm in the water drowning, a life raft is more valuable to me than a bar of gold. So that's intrinsic value. So saying that something has intrinsic value is only what its value is to you at that very point. So saying something doesn't have intrinsic value is a really lazy argument. So I'm not saying that crypto doesn't have intrinsic value or it does. What I'm saying is that in the world we're moving into, the only one that I can guarantee will still be around in 10 years' time is Bitcoin.
Yeah, so we will have the correct disclaimers at the end of the video and in the description, so that none of this is financial advice or personal opinion, just for educational purposes, of course. Now, one thing that you brought up and highlighted, which I think is really important there, Robin, is how it is, from a technological perspective and a utility perspective, unfair to put Bitcoin into the same category as, say, your meme coin that's just come out today on Solana. How is that possibly okay to put them in the same boat? It's not. However, I personally call anything on the blockchain a crypto asset. I know some people say there's Bitcoin and crypto. Obviously, there's Bitcoin, altcoins, meme coins, celeb tokens. My Lord, let's not dive into that this episode. So yes, there's no tax differentiation between the lot. It's more of a deeper understanding, and hopefully our listeners and viewers will understand that we're not just here from a tax perspective. We are knee deep in the space itself. So on that note, talk to me about Bitcoin and altcoins, maybe the market in general, Robin, because I know you're one of those people, and this is not me saying, oh, you're one of those people. You're just in the bag where you say Bitcoin and crypto, very separate as far as I'm aware. So talk to me about that.
So first and foremost, what I will say is, yeah, I have these opinions, but they are just opinions. I mean, trading wise, when you're talking about trading wise, I'm probably the last person you follow. I'm the same as you, Jamie. If I went towards something, the horse has already bolted. So I'm about as far from a trader as they come. But what I do see is a global shift, especially with everything that's happened in America. So as someone that's heavily in the Bitcoin community, what's happened in the last year in America, I hate the word unprecedented, but it absolutely is. We couldn't have dreamed of the level of regulation that's come in towards Bitcoin in the last year. So that means the acceleration of Bitcoin is huge, and it's come on so far. You know, we have ETFs, we have a pro-Bitcoin president, we've got a pro-Bitcoin cabinet in America, really. You know, all of these things have accelerated it so quickly. Institutions are adopting it on an absolutely amazing size and scale. You know, it's not just strategy anymore. You've got hundreds of treasury companies doing it, buying Bitcoin. So what that means to me is that you have got a growing market. Now, that growing market means that crypto, and I say this very openly because professionally, crypto assets are all one to me. Personally, Bitcoin and crypto are separate. So I have to, I do sometimes when I talk on Bitcoin podcasts and things, I will say caveat, I will say crypto assets and talk about Bitcoin because they are all one bracket professionally. But what you're talking about is a market that historically has moved where Bitcoin has had a bull run, altcoins have followed. I think that's changing. I think Bitcoin's volatility will slow as it grows in market cap. And I think that the adoption stage of it means that altcoins won't necessarily follow. If we had a large move in Bitcoin tomorrow, do I think we'd have a move in altcoins? Potentially, but that's more to do with market sentiment than anything. It's people seeing Bitcoin do it and they're looking for the next Bitcoin. That's naivety. You know, we all say, actually in Bitcoin, we have a saying that everyone has their altcoin phase, which is everyone started off in altcoins looking for the big gains and realized that
this guy still doing it.
And that's a known expression. But what we're saying is that everyone's looking for the big gains, but actually the consistent gains will come from something like Bitcoin. So you may find an altcoin that 10x's. You may get lucky. It's glorified gambling to me, but you may get lucky. You may have internal workings of a project and know that it's got something great going on or a great utility that's going to work. Fantastic if you do. Overall, what I think is changing is that the Bitcoin's adoption is outpacing the rest of the crypto market, meaning it's becoming more mainstream, meaning that it doesn't necessarily mean altcoins will follow in their growth. So if Bitcoin goes up 100%, historically altcoins as a market would increase similarly, a similar rate. I think that will slow down a lot. But on the other side of that, as Bitcoin grows, I think its volatility will sink, and you won't see 60% dives and 100% go upwards. I think you'll see more consistent growth within it. And there'll still be ups and downs. Volatility in Bitcoin is actually a gift, but you'll see ups and downs. But generally speaking, I think it will flatten out a bit.
So do you not believe that there will be an alt season coming?
Not in the way that historically there has been, no. I think we'll see, there'll always be coins that succeed. That's just the nature of the beast. But I don't think we'll have an alt season like we have historically, where I think another personal opinion is I think the last bear market changed everything. You saw it and I saw it. A lot of people got hit hard. You had projects in DeFi offering ridiculous yields that were unsustainable. You had FTX, you had all of these things. I can't remember the name of what was the platform that went down? Anchor.
Yep.
You had all of these things. Anchor was an insured protocol that offered 20%, wasn't sustainable. You know, all of these projects failed. And I don't see that the altcoins will go up again. And what you actually need is those projects. You need those DeFi, those staking returns, because what people were doing was buying coins because the yield was 1,000%. You're not going to see that anymore because I think protocols will realize it's not sustainable. And all of these protocols disappeared overnight when the bear market hit after Bitcoin dropped 60%. So I just don't see, I see the market shifting from the last one anyway. But if you look at the halving cycle of Bitcoin, where things have generally gone a certain way and then altcoins have followed, I think that depeg has probably happened now, in my opinion.
Yeah, and that does make sense. I somewhat agreed. I thought I was going to come in hot and completely disagree with you, but I actually do somewhat agree with you on that. I do believe that because the market is absolutely saturated with all sorts of the next big thing. And unfortunately, or fortunately, depending on which way you want to see it, one of these will be the next big thing. You know, there's going to be the next one. It's not going to be as frequent as the last sort of cycle, if you like, in my opinion. I believe that the top 10, top 20 altcoins will do well as long as nothing horrible happens or nothing particularly changes for that alt season. But I don't think there'll be many more to enter that sort of top elite bracket, if you like. There will be some, of course. And if you catch those, yeah, you'll make money. But it's finding that in a sea of, you know.
So this is technology. I'm not naive to that. This is technology, right? So one of my opinions that will be is that there'll always be altcoins. There will be a utility for some of those altcoins. You know,
Of course, yeah.
I'm not an expert, right? I'm not going to pretend I am. I know the coins. I don't know their utility. But let's take Ethereum, a controversial one at best. Ethereum was, on my understanding, created as a security token. Well, if we move into a blockchain society where banks are custodying Bitcoin, blockchain becomes essential. They will need a security token.
Yeah.
Now, I'm not saying Ethereum's that token. If I had that answer, I'd know that Ethereum's going to be worth something. I think banks will probably make their own security token. But so I do think there will be a utility for these. It's just which one will be the right one. And to me, that's gambling. I know that Bitcoin will be the sole survivor of all of that. There could be 10 different security tokens in a year's time, and Ethereum could be worth 0. But yeah, I think that's where I see it going. And excuse me using Ethereum, it's a pure example. It's not where I think it's necessarily not or is going. But I think banks will find a way that they have to create their own tokens to custody things, which we need to be careful because, you know, again, that comes with its own risks. Is that just a fiat, you know, hiding place for another CBDC or something like that, which I'm absolutely against. But, you know, these sorts of things there are going to be utilities for other things, and therefore they will have value.
So one of the things I want to highlight here is when we're bookkeeping, either for ourselves or whether you come to us, so you're a client of ours or go to another accountant to deal with this, one thing that's very important to understand is with Bitcoin, it is different to the others. So, for example, Bitcoin operates on the UTXO model. Don't ask me what that means exactly. I'm not a dev. I'm not that technical. But what I do understand is the way it works and from an accounting perspective. So, with your, say, Solana wallet or your Ethereum wallet, you have one public wallet address. You upload that. The data's pulled through API, or maybe you get the CSV files and you're done. With Bitcoin, and I don't know if you find the same, you must find the same, Robin, because you're a Bitcoin specialist. People tend to forget that with every transaction, a new address is created for security reasons, which is what makes one of the things that makes Bitcoin so wonderful. So you could easily grab one of those addresses by accident. So what you need is the extended public key, the XPub key, if you like, for your books. So I just wanted to reiterate that for anyone listening. If you have Bitcoin and you're dealing with the bookkeeping or the accounting or the taxation of it, get the extended public key, please, as soon as possible. I am aware that in order to receive that, it can open you up for that duration of time to potential maybe malware or attacks, of course, because it does open up risk at the time. But I won't tell you how to do it because that is very unfair and it might not be the best way. Robin, do you have any comments on any of that?
So Bitcoin and privacy go hand in hand, right? They're essential. And there's reasons for that. You know, we've got future problems. You know, if someone, for example, owned one Bitcoin and their data got leaked in the future, potentially that opens them up to risk of what we call a wrench attack, someone going to their home and trying to attack their Bitcoin. It's, you know, all of these things, privacy is really important. So UTXO management within Bitcoin can be important for those reasons. XPubs are good if you need them for certain parts of your transaction history, as you say. CSV exports, I always find are even better because if it's possible, it's not always possible depending on what cold storage you use or if you use multi-sigs, etc. But number of transactions, you can manually recreate them. I've manually recreated them quite easily for people before. I think privacy is very subjective to the person. I see some people who are very relaxed and some people who are absolutely massively cautious, which I understand both ends of the spectrum. But UTXO management is essential within Bitcoin for the future of it. We don't know what the future is going to hold. But it is something that everyone considers. And most people that have gone down the Bitcoin rabbit hole have been around for a long time. They will be well aware of this and they will know, you know, they won't necessarily know about the XPub, but they might not actually want to use an XPub. because they might feel that there's risk at it. And that's something I have to work with all the time. UTXO management, I'm not the expert on it. I know there's Bitcoiners out there who would 100% be better advising on it. But what I always say to people is the best and most efficient way to get the data is the way that you feel most secure with. I always try and work with CSVs. I always try and work with those where possible. The less data I can have, the better for me. I'd rather not know, if I'm completely honest. So yeah, there's a lot to work around with that. But it going back to crypto, Jamie, you know that data is one of the biggest issues that we have.
Yeah.
There are Bitcoin public addresses. People do use Bitcoin wallets and they do have public addresses. And sometimes you will have multiple transactions on one address. But actually, most Bitcoiners will manage their transactions effectively to ensure that they don't use the same address twice.
Yeah, and again, just reiterating once again the privacy of all of this, and it's not just about when you're talking to accountants and when you're talking to your mates, when you maybe you're doing something like this, maybe you're tweeting about how successful you are. Wouldn't recommend it, of course, but yeah, privacy is definitely of the highest importance. Now, in terms of dealing with Bitcoin from a tax perspective, is there anything that you think that our viewers would appreciate knowing if they were to try and reconcile their Bitcoin transactions? So from my perspective, number one, please use software, absolutely use software, and absolutely do the reconciliation afterwards as well. Just uploading the data into there will not work. And I've banged on about this for many, many moons now. But is there anything specific with Bitcoin, Robin? Maybe some top tips or anything like that you could bestow upon our viewers?
So, as I said earlier, it's very much treated the same as the rest of crypto assets. And from that perspective, I'm not going to offer any nuggets as such that would fascinate people and change their life. But I do think that the things I've talked about previously, making sure that you've got your own goals in mind and what you're trying to achieve. Don't be naive and consider how you want to put the data together. Because the biggest challenge, I'll go back to data because it is so important, but the biggest challenge for me is finding what that person is comfortable within trying to get everything together. Because people are very private. I understand that. I have people who will say, do I need to tell you X? Do I need to tell you Y? I try and take as little information as possible. Plausible deniability is important to me. But sometimes, well, it's true. I mean, I'll tell you a story here, right? And this is a genuine, true story. I had a client who used tax software. I won't say which one, but he used tax software. I did his tax return. I didn't download any data or anything else. I just had access via a sharing link that he'd shared with me. The next day after completing his tax return, pure coincidence, but at the time wasn't sure of this, he got a call from a fake police officer. Now, that call basically said, we know you have a ledger, right? And he phoned me the next day and went, the only person that knew I had a ledger was you. And I went, well, I can categorically say that I've not revealed anything to anyone, and I can say that I don't download anything onto my system. So even if someone got access to my computer, which they hadn't, they wouldn't have seen that information. It's not stored anywhere. I don't write it down. It turned out, obviously, because I'm quite knowledgeable, I asked him, was he aware of the ledger data leak that had happened? And he wasn't. So when he went and did a bit of Googling, it was a really common result of the ledger data leak that they were getting phone calls. This shook this guy to the core, though. He was very upset and very scared. So to me, that's why I say plausible deniability, because the less I can know, the better for me. I can turn around and say it hasn't come from me, and I can openly say that, not just no, this could ruin me. So for me, that's why it's really
important. Why I reacted to it, Robin, because when you said plausible deniability, initially I thought, what, from HMRC? No, it's from something like this where a client has had some form of data leak and fingers are pointing at you, because the same thing has happened to us before where we've had a call from a lead and they didn't end up signing up. They didn't need to. And I think it was the next day they got hacked, or they got like a small amount drained from their wallet. And of course, the first person they got to point at is us. To which I very quickly pointed out during the 15-minute call I had with this person, I had no idea of what he had whatsoever in terms of where it's held, what he's holding. All I knew was the general value. That was it. And his number. That was it. So yeah, and I know exactly what you mean now in terms of plausible deniability, because we are expected to have a very high level of security and anti-money laundering checks and all sorts with our profession. In terms of security and issues, how about banks and the banking situation? I believe a senator was talking recently, yesterday, as of this recording, so probably last week by the time this goes out, they were talking about how they want to open the floodgates to crypto companies and them open up bank accounts and all sorts. I know you know a little bit more about this in terms of the Bitcoin policies within the US.
Bitcoin policies in the US, I'm absolutely very jealous of. Their speed at which they're moving is fascinating from a UK perspective, given how stagnant we've remained. And that covers the whole industry, not just Bitcoin, but as a whole industry. They are literally moving at 1,000 miles an hour. There's talks, and these talks are obviously coming from somewhere, but there's talks about pro CGT rates for Bitcoin. There's talks about no CGT on spending it under a certain amount. About $200 has been mooted. They're talking about not being able to debank people for crypto. All of these things, and they use the word crypto in there, not necessarily just Bitcoin. They're talking about these things openly, and that's a massive game changer. In the UK, I understand, and I'm going to say this point because I do like to say this point, because part of my job, and you'll know this, is not just, you're not representing HMRC or working for HMRC. You're trying to adopt their rules. Now, what I'm seeing is banks are debanking people, and people are trying to say, well, why is that happening? So this goes back to actually where we talked about the separation between Bitcoin and crypto. What banks are doing in the UK is there was something called APP fraud rules that came up. And someone in a bank told me this openly. APP fraud rules changed the way that fraud and scams are operated in the UK. And actually, banks can become liable if you get found to have been scammed, if they didn't do their necessary enough to protect you. So what that meant was banks were watching tens of millions of pounds leave them every month, week even, paying for fraud and scams that were happening to people like you and I. So what they've had to do is, how do we de-risk this? Well, one of the easy answers is to take an industry where a lot of scams happen, i.e. crypto, and just de-risk it. We won't accept it because we can't. It's not possible for them to DD every single coin that comes out and gets released. So what you do is, by grouping it into one asset class of crypto assets, all they can do logically is stop crypto assets or reduce the risk. £3,000 is mooted quite a lot. Therefore, all they've done is reduce their risk, which any business would do. Whether we like it or not, I don't like it, but that's what a business would do. What we need to do really, and this goes back to the first point, is if you take a Bitcoin and separate it, then suddenly banks can, separate. One of the challenges of that is obviously exchanges will be able to, you can trade anything on an exchange. So, there's going to have to be ways to get around that. I don't have the answers. If I did, I'd get paid a lot more and I'd be working for a bank. But, these are the sorts of challenges. So I understand it from a UK perspective, but it needs addressing quite urgently because it is a big problem. But yeah, back to the US, they are really killing it at the moment and making these quick changes, which is essential. And I watch with jealousy from the UK, if I'm completely honest.
Yeah, they do seem to be leading the march towards what I would consider mass adoption, to be honest, with certain policies and regulations and the way they're going about it. The point is they're talking about it at the very least. Robin, it's been an absolute pleasure having you on this episode, mate. It always is. We've been a little bit more serious than we normally are, which is nice. Normally we do have
I've said
a
nothing
laugh.
funny. No one's going to want to watch this. I'm too serious.
Well, they need to start tuning into our spaces at some point where we're a lot more relaxed and answering questions directly. But no, genuinely, thank you so much for your absolute expert insight into all of this. I do have one final bonus question, which you've not been prepped for. And I just want to know, and it's an easy one. It's an easy one. What do you think is going to happen in the crypto space in the next sort of 6 months, 12 months, 18 months even? What are your predictions? Do you have any? You can be as specific as you like, as general as you like. None of this is financial advice. I just want to know what your thoughts are.
For me, within the crypto space as a whole, regulation has to ramp up because it is a bit, in my opinion, the rest of crypto outside of Bitcoin is a bit of the wild, wild west. Too many coins are being released. Too much is happening. Too many scams are going on. Too much money is just being wasted on things that don't really matter in the grand scheme of things. I believe that crypto is a technology and it should be about progression. It should be about progressing the world that we live in. So I do see that happening over the next 12, 24 months. I think there'll be significant adoption of Bitcoin. That will lead to a lot more percentage wise of people that are investing or getting interested and getting to know it. A lot more, we're talking about Bitcoin in tax wrappers, Bitcoin ETFs in the UK, these sorts of things will happen. So I think a lot of that has got to go on. The unfortunate thing is, whilst there's a lot of positive there, I think there'll be a lot of negative. I think a lot of scams will happen, a lot of rug pulls, a lot of, potentially if we do hit some sort of alt season, we'll have what we had last time, where people will inevitably come up with ways to pretend that they're going to make people fortunes, and people will fall for it. And, like I say, without regulation, people get away with it, and people take hard-earned money. But I think the technological advancements over the next 12, 24, 48 months is going to be huge. And I think that's going to change the world forever, if I'm completely honest. But I think that's a good thing. We need it. Bitcoin is about freedom money. Fix the money, fix the world. So for me, if that can happen, I think there's a big financial shift on the horizon. I won't go too much into that. It's a bit political, but there's a big financial shift. And when that happens, everything changes.
Some would say that there's a lack of education on all these things, which is exactly what we're here for. But thank you for that great insight again, Robin. I'm sure we'll be speaking again at some point in the future, whether it's on X. Worst case scenario, I know we'll be on the phone to each other at some point. So again, from me and obviously our viewers, thank you so much for coming up, Robin. And appreciate your expert insight.
Thanks for having me, mate. It's been good.